Hello, dear victims of my channel. Welcome to the new year. This is now 2021, and I hope you enjoyed the last weeks. Now, here is some gap still to fill within the lecture of General Introduction of Tax Law. Somewhere in the middle, there was still a gap, and that gap was chapter 4.3, the profit. So, the tax base which we need for the income types 1, 2, and 3. That's agriculture, business, and self-employment in Germany. The profit is defined as the increase of business property in section 4.1 or paragraph 4.1 in the German mode in the Income Tax Act. And the calculation is just done plain and simply by comparing the net business property, which results from your balance sheet at the end of an accounting period, with that net business property which you had at the end of the last accounting period, and that difference is then corrected by withdrawals and contributions. Then you have all the profit which the enterprise generated during the last accounting period. So to show you this again in a more, I hope, in a more easy way, why not? You can see that here on that chart. So business property at the end of this accounting year minus business property at the end of previous accounting year, corrected by amounts which you have earned inside the business but have taken out from the business in between. These are withdrawals, and amounts which you have put into the business, so which were not generated in the business, not a part of the profit, but came from outside. They have to be deducted, eliminated, because money which you put in to the business from outside naturally increases the business property, but was not generated inside the business, so is not a part of the profit. So you eliminate that. We can draw two conclusions. First, you need a bookkeeping and making of balance sheets to calculate the profit in the regular cases, and naturally that your bookkeeping also must register all withdrawals and contributions. Well, bookkeeping usually does it, but here you see one of the reasons why there is a need for that. Good. Withdrawals are added because these amounts were produced within the enterprise during the year, but you took them out. So you would get a wrong impression of how profitable the business is. Imagine if your business generated 20,000 euro and you took them out in the last minute of the year, then the business property would go up by nothing because you have exactly the same net property as before, but naturally the business generated a profit, these 20,000 which you took out, so you have to take them into consideration. Contributions, on the other hand, is the amount which you put in, and naturally that is not money which the business produced, and so you have to eliminate that. Imagine you may have a business which made 20,000 loss, and 1 second before the year ends you decide to compensate that loss by a contribution of 20,000. Then you have lost 20,000, put in 20,000. So if you look at the two balance sheets, you have then the same net property, but in reality naturally you lost money, and that must be shown by eliminating the contributions, otherwise you get a wrong impression. Withdrawals can have every possible form which has an economic value. So you can take out cash from the enterprise, and you must show it in the books. You can take out goods, assets, and you have to share with the value of these assets as withdrawal. You can even withdraw services, so use the capacity of your enterprise for services to your own private sphere or other economic advantages. There are even some specific forms of withdrawals which are rather fictitious. What I mean here is that, at least in the German law, it is treated as a withdrawal, or like a withdrawal, if you transfer transferred something which belongs to a taxable part of your business, situated, for example, in Germany, to a part of your business which is outside the country and perhaps necessarily then tax-free, for example, due to a double taxation treaty. Because then you take out something from the taxable area, taxable part of your business, and shift it to some part of your business where it no longer counts for taxation. And so that the net property of your taxable part of the profit then goes down is clear. You took something out, but on the other hand, you did not lose that, you just took it out, and so naturally that also requires a correction. The net property of your taxable part of the business went down a bit, but it produced more. So imagine you have an inland part of a business which is taxable and had up to now produced 50,000 euro, and now you take out a car with a value of 20,000 and transfer this in the tax-free part of your enterprise in Paris. Then if you make the balance sheet on 31st of December, for example, then you have first 50,000 which pushed your net property up, and then 20,000 were taken out of that taxable part, so you would only show a net increase of 30,000. Naturally, that does not show the real profit. That you took out the 20,000 was not a loss, it was just a transfer to another sphere. And so you also have to correct this as a withdrawal if you shift something to a tax-free part of your enterprise, because otherwise the real increase of property which happened during the year would not measured correctly. Examples. Well, you are the owner of a business. You took out 1,000 euro from the cash desk and carried it home. So the 1,000 is a withdrawal. Naturally, you need to register that, particularly in the bookkeeping. Otherwise, you would later be accused of an attempted tax fraud, hiding a part of your profit from the fiscal authority. So here, cash can be withdrawn. It might also happen that you have a business car, which you decide, I'm not going to use it anymore for business purposes. I turn it into a private car. Then you remove the car from the enterprise. So the profit of the property in the enterprise goes down, but not because there was a bad performance, only because you choose to take out a part of the property from the enterprise. So you would have to book the value of the business car at the moment when you withdrew it as a withdrawal. This decrease of property was not caused by the profitability of the enterprise, just by your personal decision to take a bit of the money or increase of property which the enterprise has generated out from the enterprise. So you lowered the net property, but that had nothing to do with the profit. The owner of the business may also use the services of the gardener who is employed for the business and might say, gardener, come and do my private garden. In that case, you withdraw, you use for private purposes the services of the gardener. So a bit of the value which was produced in the enterprise, here the working hours of the gardener, were transferred and taken out from the enterprise, not used to push up the enterprise property. So you would have to say what you removed there in potential economic advantages has to be corrected. How you value that is another topic for later, but not for now. But in principle, you would have to correct it. An example for a fictitious withdrawal, so not to your private sphere, but to a tax-free part of your enterprise abroad, would, for example, be that you have a machine with a market value of 20,000 euro in the German headquarters of your firm. And now, after some time, you say, I'm rather going to use this now in another part of my firm, for example, my factory in Paris. And If that part is now not an independent company in itself, but only another part of the same firm, then this is not a sale or something, it's just a transfer of property across the border. But the trick is now, if that other part of the firm, for example, your factory in Paris, is not taxable in Germany anymore because Germany made an agreement, a double taxation treaty with the other country, that Germany doesn't take tax anymore for the factory property in Paris because that is already sufficiently taxed by the French. Then the effect would be the machine was first in the taxable area of the firm and then taken out from the taxable business property to another business property which is not taxable in Germany. And naturally, if the bookkeeping for taxation in Germany has to measure if there was an increase or decrease in the business net property, naturally we look to that taxable part, and that has been diminished by your taking out the machine. So that would be regarded as a withdrawal. And so you would have to book 20,000 euro as withdrawn from the taxable part of the firm situated in Germany. And by the way, when it comes to Paris, there the property goes up by the value of your machine now. And naturally that increase in value is to be explained too, not by a profitable situation in Paris, but only because you shifted 20,000 from outside the Paris branch into Paris. And so the increase of property there goes back to a contribution and not to a very profitable situation there. Well, another fictitious withdrawal would, for example, be 100,000 cash taken out from the German headquarters of the firm, and it is then transferred into the bank account of the foreign part of the firm. So when you make the balance sheet for the two parts of the firm, the net property of the German part of the firm goes down because you took 100,000 euro out. But that is not due to losses or a bad economic situation. It's just due to your decision to take a bit of your property out of that part of the firm. So that would be a withdrawal. And now if you put these 100,000 into the branch in Paris, the net property there goes up by 100,000, but that is not due to gains and profits which you made. It's only money put into that branch from outside, so there it would be a contribution correspondingly, naturally. I hope you understood the basic ideas. Yeah, contributions are all assets which the taxpayer has transferred to the business property, or in case of that fictitious contribution situation. Contributions are everything which you put into the business from outside, so which was not generated inside the business as what led to an increase of property. And a fictitious contribution into a branch or a part of the enterprise, that would happen if an asset already belongs to the business but has up to now been in a tax-free part of the enterprise, for example, the factory in Paris. And now you take a machine outside the factory in Paris, there the property goes down, withdrawal, and you put it into the headquarter in Germany. Now, in your headquarter in Germany, property goes up during the accounting period, but that is not due to money which was earned, it was just due to that shift of property. So money came, or property came into that part of the firm from outside, and so that was a contribution. Well, that should be understandable, although one must get accustomed to it in the course of time. By the way, when it comes to these fictitious contributions and withdrawals, you must always keep in mind that the general rule is that every part of your business all over the world is subject to German tax liability, because usually you are an unlimited tax liability taxpayer if you live in Germany. The peculiar situation that there is a part of your firm which is not taxable but tax-free under German law results from special rules which deviate from that general rule. Namely, it results from double taxation treaties. So if you do not have a double taxation treaty with that country, such a fictitious withdrawal cannot really happen. And on the other hand, if you don't have a double taxation treaty which grants the exemption method, then the problem does not show up, or does only show up in a different way. So this is rather the exception, although a widespread exception, but the basic principle for you and me is still unlimited tax liability. Everything in the world is, in the basic principle, taxable, and only if there is a deviation from that principle, we would end up with such a fictitious withdrawal or such a fictitious contribution for assets moving across the border. Well, if you naturally have already understood that taxation can only happen if there is a law, then you naturally also need all the basic and important rules in the law. And so let's have a look to my translation of paragraph 4.1 ESDG, which says, which tells us this rule about calculating the profit by comparing balance sheets at different dates. Profit is the difference between business property at the end of the accounting period and the business property at the end of the previous accounting period, corrected by withdrawals and contributions. And then you have the definitions for all the important words. Withdrawals are all assets, cash, goods, products, services, which the taxpayer took during the accounting period from the business for his household or other purposes not related to the business. So if you took something out and the reason was not a business reason, then it was a private reason, that's a withdrawal. A withdrawal is also given if the right of the Federal Republic to tax the gains or the use of an asset is excluded or limited. That is a nice, complicated expression for if an asset or something else is moved out from the taxable part of your business to an area or to a part of your business where in the future these assets or things are no longer taxable, then this is a fictitious withdrawal. Then we can leave some sentences out and we end up with the definition for contributions. Contributions can be all assets, cash and other assets, which the taxpayer has transferred to the business in the course of the accounting period. The contribution is also given if the right of the Federal Republic to tax the gains from an asset is newly established in the course of the accounting period. So if a good comes from outside the taxable sphere into the taxable sphere. Yeah. By the way, it's nice to compare here the definition and the examples. Withdrawals are all assets, cash, goods, products, and services, whereas contributions are cash and other assets. So services not included. A service cannot be a contribution. This is cleverly hidden between the lines. Good. And naturally, it is not sufficient just to set up a balance sheet, but just to avoid misunderstandings, last sentence says for determining the profit, the rules on business expenses, the valuation of assets, and the rules on depreciation must be followed. So you cannot make up the balance sheet as you like it. You have to follow the rules which follow. Naturally, the way how profit is defined in paragraph 4.1 requires that you keep books and draw up balance sheets regularly. Sometimes that's too much for especially small enterprises, so sometimes you have an option for a simplified method, and the most important one is described in 4.3. Paragraph 4, section 3, ESDG says taxpayers who are not obliged to keep books and do not keep books voluntarily and are not obliged to make balance sheets and do not make balance sheets voluntarily. So taxpayers who would have to make up a balance sheet just for the purpose of taxation. These people can calculate the profit by a simple addition of business revenues and business expenses. By the way, sometimes taxation also obliges people to keep books. For example, the middle and the more important enterprises. But small ones can really be covered by that exception, because it might be that for a small enterprise, commercial law does not require balance sheets and books, and also tax law renounces on that bureaucracy and says, okay, you are too small, no business, no balance sheets for taxation are required. So these people can then choose to calculate the profit by a simple list of business revenues and business expenses, which they then add up, and from that obtain the result for the year. And the rules on the valuation of low value assets and on depreciations have to be followed. So naturally, also for these people, the rule is, if you acquire a house, you cannot offset the price directly as a business expense, because the basic rule is still expense must be that your property goes down. And when you buy a machine or a house, your property does not go down. You just exchange in the first moment cash 200,000 for a house with a value of 200,000. So the property value only goes down over time, and that is what you take into account for depreciations. And just to avoid nice misunderstandings, here they clarified, naturally, if we allow you to deduct your expense at the moment when it was made in an uncomplicated way without making books and balance sheets, that does not allow you to offset the whole price for investments immediately. Naturally, you have to split up that price over the time of the usage of that property in form of depreciations. Yeah. Then what is allowed for reasons of simplification for these people is if they buy stocks. No, stock, not stocks. If they buy stocks, so if they buy merchandise, things that they want to sell to customers, then they can deduct the cost for these things immediately, because these things are not depreciated over time. So there is no exception from this. The idea is you don't want to force these people to keep lengthy inventory and to look up everything which they sell, where they have to, when they bought it, and so on, what it costs. So to simplify life, you just allow such a small enterprise, if they buy, let's say, if a bookshop buys 20 or 100 books at the end of the year, they can directly offset the cost, and when they sell these books later, then that will completely be a business revenue. Now, in the course of time, naturally, some clever people showed up and said, well, I'm not trading in books, I'm a small enterprise. But I'm trading in houses and in real estate, land. And so these people said, well, if there is something like a profit at the end of December, I just buy a house for some 200,000, which I intend to sell within the next 2 or 3 years, and then I directly set off the costs for this, because this is merchandise for me, this is stock. I'm not using that for my own firm, so there will be no decrease of value by usage. That will just be in stock until the customer comes, and then will be paid for 200,000 plus profit. And naturally, that was a nice trick. And so in the course of time, this principle that you could directly offset as a small enterprise practicing 4.3 the costs for your stock, for your merchandise, for your products which you bought and intended to sell, or the costs for raw material, that principle was modified in such cases where one said, oh no, we can't do that. For example, fixed assets which don't have a limited period of useful life, especially pieces of land. Shares in limited companies. If you trade in shares and you are a small enterprise, you would have been able to deduct the cost for shares which you intend to resell directly. Naturally, that makes no sense. You could probably let vanish every profit at the end of the year. Bonds and other comparable claims and rights for rights in ground and buildings, all these things can only be deducted at the moment when you then resell these things and the gain of the sale is made taxable. Or when, as an alternative to a sale, you withdraw these things into the private sphere, because a withdrawal of an asset is usually treated as if you sell that asset to yourself at the market value, and so that would be the moment of the sale if you don't look at that in a strictly formal sense. And naturally, if fixed assets which are depreciated, if they are sold, you must be able to find that out, so you must have a kind of an inventory and keep a list where all these things can be looked up. What is entirely important is that if a small enterprise gets the permission or opts for that modified cash flow statement, as we could call it, just listing business revenues and business expenses, that must lead to the same total profit over the total period of life of the enterprise. The only thing which the modified cash flow statement distinguished from the balance sheet method is that the cash flow orientated measuring of the profit leads to recognizing profits and losses at different points of time. So with a balance sheet, you look more directly to when a profit is generated. The simplification is for 3 years, just you look only to the payments, or very often only to the payments. That's not really adequate and exact. That is a simplification, but whenever it comes to deciding which things can be done in the balance sheet and which under the 4-3 rules, the total profit must never be changed over the total existence of the enterprise. The total profit under the two methods must always be the same. Yeah. Another thing. So let's turn back to the basic case. If there is an obligation to keep books, or if you keep books and make balance sheets, then very often you also are obliged to keep books and make balance sheets under commercial law, under the Handelsgesetz, the HGB. And naturally it would be a waste of time and additional amount of bureaucracy if you would have to do 2 bookkeepings. So there is a basic principle which says, okay, if you have a commercial balance sheet, you are obliged to take over everything from the commercial accounting, the commercial balance sheet, and the commercial profit and loss statement into tax balance sheet and tax profit and loss statement. Deviations are only allowed where tax law demands them or at least allows them. So that means you have to take over everything from the commercial balance sheet. Every aspect on which tax law does not speak automatically is taken over from commercial law if you make a balance sheet under commercial law. That principle that you take the tax balance sheet, my personal abbreviation sometimes TBS, in German called Steuerbilanz, that means balance sheet for tax purposes. That principle that you have to take over all the contents from the commercial balance sheet. Wherever a deviation is not demanded or allowed by tax is called in German the principle of Maßgeblichkeit of Handelsbilanz for Steuerbilanz. Now Maßgeblichkeit means that you have to take over. If something is maßgeblich, then it's the ground for something or decisive for something. And the problem is, as the term, as a technical term, only shows up in that context, it is probably not adequate to translate it at all. Because if you translate it as the principle of orientation of Handelsbilanz or of Steuerbilanz by Handelsbilanz or something like that, or the principle of linkage between the two balance sheets, then somebody else translates it differently and you will end up in complete chaos. So as very often when you have a technical term which only shows up in a certain language, as here in Germany, and the phenomenon is not really known to others, then just be cautious and just stick to the original term, and if somebody does not know, then later explain that. That simplifies life. Germans will probably be used to that. You pronounce the word Maßgeblichkeit in a strange way. Well, it will not shock them. The important thing is that if you use that term, the others can directly recognize what you are speaking about, and otherwise there would be guessing around. Is linkage principle the same as the orientation principle, or the commercial balance sheet is the basis principle? So you would only create confusion. So we have the principle of Maßgeblichkeit, which says nothing else than when you make your tax balance sheet and tax profit and loss statement, you have to take over everything from commercial accounting where the tax rules do not require a deviation, or at least say you can change something. The legal basis is 5.1 ESDG. Naturally, that must also be later on in the law. 5.1 ESDG says business people, traders, merchants, who are obliged to keep books on grounds of legal rules, so mainly under commercial law, but might also be under different laws, and who make balance sheets regularly, or who make books and balance sheets voluntarily, have to show that business property in the closing balance sheet. So in the balance sheet at the end of the accounting period, which has to be shown according to commercial law, except where tax law demands or allows a different treatment. Sentence 2 is left out here. Only 5.1 sentence 1 is important for us. So what does that mean in practice? When you want to compute, when you have a bookkeeping and want to compute your tax profit, you take your commercial balance sheet, then look into it, and then you review every entry if that entry can remain the same for tax balance purposes, or if you have to make a correction. That is sometimes the reason why people say that you have to make adjustments to the balance sheet or to the profit and loss statement. That just means if you have a commercial balance sheet and it can't remain the same, then you have to make a computation or a transitional computation where you make a list of what has to be changed. And then you arrive at your final result. How can I explain that with an example? Imagine the Smith Big Business, EK. EK is the abbreviation for registered merchant, so that is a natural person. So for the Smith Big Business, EK is the name under which a natural person, probably Mr. Smith, runs a shop which is owned by him, and he is resident in Cologne, Germany, so unlimited tax liability taxpayer. The accounting year of the Smith Business, EK, has just ended, and the commercial profit amounts to 200,000 euro. And now tax law has to take that over, but we have to review everything and to find out, can it remain the same? And now imagine when we computed these 200,000 commercial profit, there were entries in the profit and loss statement for a trade tax payment, 50,000. That was treated as expense under commercial law, and that was correct under commercial law, because every time when you spend money, you must explain in the books where it went to. So you made an entry, 50,000 vanished from my bank account, and it went away for paying the trade tax. Now, under tax law, trade tax payments don't lower the trade tax and the tax profit at all. So you have to ignore that payment for computing the tax profit, because it makes no sense to lower tax basis by tax payments. So, and you also had an expense for a birthday present to an important customer. You wanted to create a nice atmosphere of friendship, and so that customer in the future also places some nice orders again. It's your firm. Under tax law, such an expensive present is not allowed to lower the tax profit. So you have to ignore for tax computation that you made this present. You have, because the tax law thinks you have to pay for presents from your tax net income, as other people do or have to do for the presents which they make too. Now, under commercial law, you had to book it as an expense. You have to explain where all the money went to. And under tax, you are not allowed to show it. So how would we deal with that? Well, here you see. We take our commercial balance sheet. We have a commercial profit in the end of the profit and loss statement, 200,000. Then we begin to review the entries. Okay, trade tax amount. There was a book entry minus 50,000. We are not allowed to make that entry, so we have to reverse that. Well, minus 50,000 can be reversed by adding plus 50,000. Then you arrive at the correct zero. And the gift expenses of minus 1,000 have also to be removed. So if we want to eliminate minus 1,000, we probably add 1,000. Then we end up with a correct zero. Now, if we see what we have to change in the different entries, we started with 200,000. We had to eliminate 50,000 and 1,000 by adding them back. And so we had corrections of plus 51,000, and our final result ended up as 251. Commercial law profit, and then corrections eliminating 51,000 minus amounts led to plus 51, so we end up with 251,000. Yeah. Here you can think about the same. This is a person who hopes for a bright future, Mr. Ivan Toby Rich. He is living at Kleve, owns a shop at Kleve, and sells clothes for winter, which is, if it's not the best period of summer, which is usually a good idea. The balance sheet for commercial purposes shows a profit of 500,000, and now we just have to review. We only have one task. We have to review all the expenses and revenues and to check if anything in there has to be changed for reasons of tax law. Now, he depreciated the building at 20%, which is rather pessimistic, because the underlying assumption is that the building is going to last only for 5 years and then you can burn it down or so. What might be, there are reasons for that. Now, for tax purposes, there is a clear rule. Only 3% depreciation for a business building is allowed in all cases where you cannot definitively prove that the useful life is going to end earlier. And now imagine, even if the house is expected to break down after 5 years, our taxpayer is not able to prove that. Then we have naturally the following situation. There was an expense for depreciation of 100,000 entered into the commercial bookkeeping. Now, for tax purposes, only 15,000, 3% of 500,000 would have been allowed. So we have to eliminate the difference. 85,000 expense have to be eliminated. How do you eliminate minus 85,000? Well, just by adding up plus 85,000, and that would lead us to a total tax profit of 500,000 plus 85 for correction. So our taxable profit will be 585,000. By the way, naturally under the assumption that all the other things, all the other expenses and revenues can remain uncorrected. That will not be the case in a real life case, but in our case, that is the case. Okay. Now, let's look to the contents of the profit and loss statement. We have already spoken about income-related expenses and revenues, and it's not a secret that in the business area, the basic concepts are probably the same, but you speak of them with different terms, and there are different references in the law, and yeah. So you would in the business area not refer to the sections 8 and 9, revenue and income related expense. You would here take refuge to section 4, paragraph 4, business expense. There the definition is business expenses are those expenses which are caused by business. So caused by is the important term. And for business revenue, there is no definition in the law at all. That is usually, that gap is usually closed by analogy to 8 ESDG, or you just close it by defining it or understanding it as the opposite to business expense, so as revenue, which is caused by business. Both ways lead to the same result. And the courts in Germany usually are very keen on interpreting revenue and income related expenses in the area of the last types of income in the same way as the business revenue and the business expenses definitions in the first 3 types of income. So this is usually a formal discrepancy. Please remember how we defined business expense or income related expense, which is deductible when you compute the income. The same 2 tax tests must be made when it comes to business expenses. The first test is something caused by business. And only the cause, so the motive is, the prevailing motive is decisive for that. Is the cause why this business expense was made, is the cause something which has to do with business? Necessity is not necessary. If you did something for business reasons, motivated by business purposes, then you may make an error. You may waste money. All that does play no role. It is a business expense. Also, success is not needed. You can invest money for business purposes and have a failure, even a foreseeable failure, because you are an idiot. Plays no role. If there is a cause by business, it is qualified as a business expense, but it still has to pass a second test. That first test says, we trust in the merchant. The merchant is the person who knows his or her business best. So if the merchant thinks it could be a chance to invest in something which might be a failure or might be a success, merchant will know best. At least a tax officer working in an office far away from reality will not know better. So let's decide the merchant about his own property and money. The only test which we do to prevent abuse or so is the second test. Is there also a private, that means consumer-related advantage combined with that expense for the taxpayer? If so, then we remind the taxpayer of something. A business expense must be caused by business. It must be entirely caused by business. That's between the lines. So exclusively caused by business, that is no longer the case if there is also some private advantage for the private life of the taxpayer. So what has nothing to do with income generation. That's the test by which you automatically exclude any abuse. If people set off things as business expenses, they don't have any fun from it, because by definition, everything which might be fun is a private advantage and would spoil the whole thing, and then it would at least be classified as mixed expense, and mixed expense is regarded as privately infected expense and not deductible, entirely under paragraph 12 ESTG. The only chance you would have in case of mixed expense is to unmix it, so to prove to the fiscal administration that at least a part of that mixed expense is entirely and only caused by business. And if you are not able to do this, to show them that in a generally acceptable manner, then the whole mixed expense is blocked. So what is mixed and remains mixed, there you are lost. Examples. Imagine we have a tax advisor from Germany, from Aachen, Mr. T. He feels obliged to buy an expensive suit in order to impress his clients as a successful tax advisor, because he fears, and he knows his customers, and they are strange people, but rich people. He fears, entirely correct, that if he meets them in clothes of inferior quality, here please, they will either view him as a loser or as strange, eccentric. You know, by the way, if you want to improve your English, eccentric are people who are strange or even mad, but unfortunately they are your superiors. So then they are eccentric. And he fears if they view him as strange, or okay, what does the guy wear? Evidently a loser. How can such a loser give me a good advice? Then he fears to lose their orders from them as a client. So naturally, important and expensive suit is necessary, is really compelling for, and is a good idea, will be accepted and underwritten by everybody familiar with that business and his customers. They will all say, yes, you are absolutely right. Without an expensive suit, you will go under there and die. And so let's make the test. First, can it be a business expense? Is it caused by business motive? Yes, and the answer is yes. Now the counter test. Is there also an income related, no, a private, so consumer related motive or advantage combined with that expense? And the answer is, well, a nice suit can also be worn for private occasions. Most people don't do, but there are always occasions where you could do. And there seems to exist no generally accepted way how our tax advisor could separate the expense for the suit into a part which entirely relates to business motives and which another part which entirely relates to private occasions. And as you cannot prove that a minimum amount of the money refers exclusively or goes back exclusively to business motives, then you can forget it. It's mixed expense, not deductible. And by the way, naturally, a suit of 2,000 euro would also have probably to be depreciated over time, but that's not our point at the moment. So, next example, our tax advisor begins to take an interest in IFRS. IFRS is something which you probably come across during your lifetime later, International Financial Reporting Standards. So some standards on bookkeeping for enterprises with a large international background. And he thinks might be interesting for my job. I buy a book for 300 euro, indeed not cheap, And his idea is if you ever get a client who wants to know about IFRS, you can look things up there and you can prepare yourself when you have free time. So you can look up in your library your own one, your private one, from time to time, and learn IFRS. Unfortunately, he never finds the time really to read the book. It's just on the shelves, and the client interested in IFRS never shows up. Question: business expense or not? And the answer is, first, do we have a cause, a business motive? Is it caused by business? And the answer is yes, as the case has been told, yes. Is there also a private advantage, so consumer-related private advantage, combined with buying a book on IFRS? Now you don't know IFRS, but it has to do with bookkeeping, and you have already an idea of bookkeeping. And I can say it's no secret that the vast majority of mankind does not regard reading books on bookkeeping as a favorite leisure time occupation. So if you use a book on IFRS as something to spend your leisure time, as something where you say, it makes my heart rejoice, that's better than taking a shower in the morning. I just need a book on IFRS. That's what I want to read when I have some free time, when I lie in the sun at the beach of Mallorca. So if that is the case, you are indeed a minority, and you should perhaps visit your doctor again and change your medication. Good. So we can agree IFRS, no private advantage combined with that. So caused by business, yes, no private advantage. So yes, it is a business expense. That he never used the book is nice, but does no harm. This is caused by business and entirely by business, so it's deductible. Now we have somebody else, a similar case. This is William Rita, and Writer, whoever you pronounce it. He published crime stories under the pseudonym W. Rita. So by help of a publishing house. That gives this way he writes a manuscript, sells them the manuscript and the right to print it and to sell the books, and so he has nothing to do with the technology stuff. He only has the ideas and writes the books that kills the people in mind. Now, in order to get ideas, some colleagues might also say in order to steal ideas, but the limits there are, the borders are fluent. Writer regularly buys crime stories written by other authors, reads them with genuine interest, and whenever there is a crime story in a movie, he goes to cinema and views the films there. The expense for the books last year was €3,000, and the expense for the cinema visits was €500. And he says, that really gives me great ideas whenever I see a good or a bad crime story, because I either get good ideas or I get better ideas than the people who wrote that book. If you read something where somebody does it really wrong, then you often get the idea how you could do it better. And so that's exactly how he uses all these crime stories. Now, business expenses or not? And the answer is, well, let's pose the two questions. Is there a business cause, business motive? And the answer is yes, definitively yes. Is there also private advantage combined with that? Well, and now you must see that for many, many people, reading crime stories is regarded as nice. People enjoy that. That can also be a part of private life. And you probably don't read crime stories professionally if you hate them privately. At least not in that extent. So he is probably not able to draw a line. Which crime story have you read exclusively for business reasons? You will not be able to demonstrate that there are or is a certain amount of the crime stories which you just read purely out of professional interest. And you will not be able to prove that privately you are not a crime story adherent and a maniac. So mixed expense, completely mixed expense, dead and gone, not deductible. So no business expense under, by the way, writing a book. That would be which type of income? 1, 2, or 3. 1 would be agriculture, forget about it. So is it business expense under income from business, or business expense under the headline self-employment? There you probably remember that self-employment were certain limited, very noble professions, usually of a higher intellectual quality, and writers, authors, scientists, inventors are such free professions, and so this type of income where the business expense has to be deducted would be self-employment under paragraph 18. Good. Tax advisor T again from Aachen goes to a conference on changes, recent changes in tax law. That's always something important because, you know, tax law changes every time in details, fortunately in details only. And now he wants to get informed about the details firsthand from the experts who are near to the ministry and goes to a conference in tax law in Frankfurt. And the conference begins at 9 o'clock and will last the whole day, so it's not possible to stand up, to raise in the, oh my God, to wake up in the morning, leave the house, take a car, run to Frankfurt, and then arrive there in time, and it doesn't work. So a conference is only worth half of the money if you fall asleep at 10 o'clock already. So he makes the only reasonable approach, books a hotel, arrives at Frankfurt by train in the evening of the day before the conference begins, stays there overnight, and then goes to the conference. Are the costs for the hotel stay a business expense? And the answer is, first test, are they caused by business? Yes, he did it in order to be able to attend the conference in a reasonable way and in a profitable way. So the hotel stay had a business motive. Do the costs also contain a private, so consumer-related advantage for him? Now one might argue that the ability to sleep in a bed is of immense private importance. Now on the other hand, the guy also had a bed at home. So let's pose the question differently. Is there any private advantage in staying this night not at home but at Frankfurt? And the answer then is clearly no. It does not bring a material additional advantage to have a bed in Frankfurt for a night over having a bed in Aachen where you live. So clearly no private advantage which might matter for things here. So the stay in the hotel is accepted as a business expense because there is no really convincing private advantage which we can see here. So you have always this sequence of two tests. For business revenues, no official definition, and there you would ask, are they caused by business? But there is no two-step test, similar to the test which you have with business expenses. On the contrary, in the commercial code, Handelsgesetzbuch HGB, there is even a rule that in all cases of doubt, it shall be assumed that the merchant acted within the scope of the business and not in private function. Good. Okay, so let's go on. A craftsman worked for a customer and demanded 200 euro for his work. The customer then was so happy with the work that he paid 200 euro for the invoice and then gave 100 euro in cash voluntarily on top as a sign of my high personal respect because I like you and as a recognition of such an excellent work. And now the question is the amount, especially the additional amount, a business revenue? The 200 euro naturally caused by the business activity, and the 100 euro also, because they are not personal friends. There is a connection with what he did. Voluntary payments are also payments which you get for your business activity. It's caused by business, so it's a business revenue. There is no debate and dispute over that. That's a clear thing. So no hope, that's taxable. A business owner owns a shop in Kleve in Germany and another shop in Amsterdam, Netherlands. Now the shop in Aachen delivers by mail, DHL also, some goods to a customer in the Netherlands and demands a payment of 200 euro for them. Now the customer unfortunately shows himself well informed and does not transfer the money to the bank account of the German shop in Germany, but to the bank account of the Netherlands. Under civil law that makes no difference, because you paid money which you owed to the owner of the shops to a bank account of the owner of the shops. Where that bank account is does not play a role. You were obliged to give 200 euro to the owner of the shops. You did it, so you paid. Now the owner of our shop is left back with a problem. Is the 200 euro payment a business revenue of the German shop where the job was made and the goods were made, or of the Dutch shop where the money ended up? And the answer is, well, a business revenue is a revenue caused by business. If you have two businesses, one in Germany and one in Amsterdam, then it's clear a business revenue is caused by the shop in Germany, so it is a business revenue in the shop in Germany, even if the money ended up elsewhere. The same, by the way, if you do something in your business and the customer pays to a private bank account of yours, it's nevertheless a business revenue. So when the fiscal administration ever finds out that the business owner got money for business activity and received it on a private bank account, they will directly suspect that you intended some tax fraud, because there is usually it's usually customary that you receive business revenues on a business bank account so that your bookkeeping people can see all your revenues. When you get them somewhere else, it's highly probable that they will not show in your bookkeeping, and so will be hidden. And that is directly something where people from fiscal administration will start criminal investigations. But another example. So a business owner has received a credit from his father, 300,000 euro. Now father dies and the business owner becomes his only heir. So under civil law, there is no problem. You cannot owe money to yourself. So as he inherited the claim from his father that the credit must be paid back, and he is also the person indebted, the two things clash and vanish into nowhere. There is no longer a credit debt, so you have to remove it from the balance sheet. So your net property goes up. All you have minus less debts than last year, so net property goes up. Is that increase in the net property a business revenue? And the answer is, this increase was caused entirely by private reasons, so this is definitively not a business revenue, but something which happened in the private sphere, so it would have to be neutralized. This is probably regarded as a contribution. You were richer in the private sphere and then passed on or allowed that this increase of your personal wealth was for the benefit of the enterprise. Okay, private reasons, no business revenue. Yeah, another aspect. A sole trader is sick with his business, and perhaps really sick, and retires from business in year one. After years after years, a former customer approaches him and says, no. Well, you probably never noticed it in the time when you still had the shop. I was always shoplifting goods there. it really gives me a bad feeling. I want to clear my conscience and pay for the damage here of 500 euro. Please accept them. Well, now a question. Are these 500 euros for business revenue, although our sole trader has long time cancelled his business? And the answer is, not surprisingly, again answered by our test. Is that payment caused by business? Is there a cause which is related to the former business activity? And the answer is yes. Our sole trader had goods in stock. They would have normally been sold. Now they have been stolen. And because somebody stole them from the shop, that person later is willing to give you 500 euros. That is a connection with the business and entirely business. There is no private motive. So it's a business revenue, indeed. Even after the business has closed down, this is still a business revenue. And there is even a paragraph in German ESDG which clarifies that delayed payment or some things, later payments for a former taxable activity are also covered by tax law. Business expenses. Now, business reference. Now we have another special aspect. Not all business expenses are deductible from tax. There are certain expenses which are clearly only motivated by business, but nevertheless banned from deduction. That means you have to ignore them when you calculate the business profit. Have to do as if these things did not exist. Non-deductible expenses. The idea is usually that it's not justified that certain people can make expenses which lower the tax base, so which are paid from the business profit, whereas other people have similar expenses and have to pay that from their tax net income. There is a danger of an injustice even there. But you must see one important thing. You can only classify something as a non-deductible business expense if first you can successfully classify it as a business expense. Because private expense can never be a non-deductible business expense. It is not business expense. So first you have to pass the two-step test for business expenses, and then you can read the list of the non-deductible things. So the first example to illustrate that, imagine an insurance agent gets 50, throws a big party, invites some 100 or 200 guests, and as it is customary with insurance agents, they use all private occasions to do business. So the main motive is I want to see a huge mass of customers, show my face to them, make friends with them, and later I probably can approach them again for insurance contracts, or if they are already my clients and customers, then they feel as if they are my friends, and so they don't cancel their contracts. So the question is the party perhaps non-deductible business expense? And the answer is, let's first test if it is a business expense caused by business motives. Yes, he wants to use the occasion to improve the customer relationships. Second, is there also private, so consumer-related advantage in that? And the answer is, well, celebrating your birthday with friends, and not so close friends, and people whom you know, that is something private, which we usually have in our private life. And so this is a private motive also, and you will not be able to split up the expense into expenses which exclusively relate to business motives. And so this is a mixed expense, and so you don't need the rules on non-deductible business expenses. You already failed before. So when you classify things as business expenses, you have to check certain list, because certain things are not allowed to be deducted as business expenses, although they are business expenses. The first example important is presents which you give to people who are not your employees. So if, let's say, a trader makes a present to a supplier, some important luxury goods, 2,000 euro, entirely caused by business, no personal friend, it's just to improve the business relation, but not deductible, because the idea is other people also have to pay for their presents to other people whom they know from their net income, and that also should be the same with business owners. Otherwise, the whole class of business owners would probably have houses full with things which they got from their friends and where never taxes were paid for. So that should be avoided. The only thing which is an exception is one should not overdo it. Small gifts are allowed. So if you make gifts to business friends and the total amount of the costs for the gift does not exceed 35 euro per year, then it remains deductible. But that is an if clause. So if you pay 35 euro and 10 cents for the present, then the whole amount of the present is not deductible. Hospitality expense, so inviting people to dinner and similar activities, is only deductible up to 7% of that amount of the expense which is regarded as adequate according to general public opinion. So inviting somebody to a restaurant makes sense in order to have a nice atmosphere for negotiations. Now having a meal is also something which has a private advantage, clearly. But on the other hand, you can prove, or at least make plausible, that a business meal will probably here on such occasions be more expensive, and has to be more expensive than the meal which you would eat if you were alone and on a private occasion, because you can't invite the important guest whom you want to impress and honor to McDonald's or to a low-value restaurant. That would be a kind of an insult. You want to show your guest that you have a high esteem for him or her, and so you bring him or her to probably a high level and high price level restaurant, that you don't create the impression, well, when you come, we begin to save our money, and we are not generous towards you because we don't hold you in high esteem. That creates a wrong relation. So probably you must pay more than you would pay for your own, and that's the reason why not completely the business meal expense is cancelled, but 30% only of that amount which is regarded as adequate. And inadequate would be if it's an intolerable waste of money, and, or if it's something which is morally unacceptable from the view of the general public. So inviting people to a nightclub and spending 2,000 euro there is not a tolerable way to do a business invitation. So their tax law would probably say no, not probably, would say no. Expense for guest houses for business partners, for persons who are not employees, and if those guest houses are outside the city where the firm of the taxpayer is located. Sometimes people had the need, if business visitors came and there wasn't a good hotel, then they had a small hotel of their own for business guests, which charged nothing. That was entirely for business. But on the other hand, there are people who invite business friends to a holiday, just to It's not exactly a bribe, but it's creating a good atmosphere and working relationship. Um, so, for example, you might go on holiday with a manager of another firm or say, let's do some negotiations, and we do it in a nice atmosphere. We have a nice home somewhere in the Alps, and there we meet for 3 days and go have some walks in nice air and nice atmosphere. We can do there everything. Nobody disturbs us and so on, and that is therefore business negotiations. That would probably trigger if you have a guest house completely owned by the firm for such purposes. That would probably non-deductible because that's a kind of financing holidays for you and your employees and your business friends on the cost of the taxpayer partly. Hunting and fishery, same idea. Let's start a kind of special event, have some holiday together. Then there is also a rule for additional expense for nutrition or food, so that's meant. The idea is people said the same idea with the restaurant, basically. When I am at home or when I am in the firm, I know ways how to eat cheap with lunch also. Now when I'm on a business travel, away from my firm, away from home, then I probably am forced, due to a very short lunch break and due to the fact that I don't know the surroundings properly, then I'm probably forced to go to a restaurant which is more expensive. I can't cook myself something, and so I have necessarily additional expenses which I would never have if I were not on the business travel. And so somebody argued successfully decades ago in court that naturally not a part of the meal expenses private, but that the fact that this meal was far more expensive than it would have been without the business travel. That this exceeding amount is entirely caused by business. And so, in principle, there was an agreement. People accepted that, yeah, the additional expense caused by the business travel for meals and similar things, that must be deductible because that's entirely caused by business. But the question is now, how do you measure what would have been your normal business meal expense and what is the additional part of the meal expense, and that would be highly complicated. And for that reasons, tax law in Germany said we standardize that. We make an estimate which amount you can reasonably deduct as additional costs. And so here the bookkeeping would say the real cost, the actual cost for, and even the actual additional costs are not deductible. The only amount which you can deduct for additional meal expense during such a business travel also is an amount which is standardized in the income-related expense rules, also for employees. You just take over that rule. Expense for commuting between home and workplace are not deductible, only with the amount which is characterized in the next sentences. You must know the following background. In times which are long past, long ago, there were people who bought, let's say, a luxury car like a Lamborghini or a Corvette, and then used that car for business travels, driving to business and back, and seldom used that car for other purposes. So they could prove that, let's say, 99% of the cost of the Corvette or so were related to business travels only and could deduct that. Now, naturally, they would proudly tell all the neighbors that in their case, the luxury car was mostly financed by the fiscal authorities because they could offset that all from the tax base. Naturally, that was not regarded as funny by others, and there is a certain, although some kilometers are entirely used for business purposes, there is still some private background. And so, in order to avoid that rich people finance or buy expensive cars and then have the feeling that the fiscal authorities pay most of the cars, and because a good car is always a kind of a private hobby, their limits were made, and so it was said that the cost of a car for the travel between home and workplace can only be deducted in a standardized way, irrespective of which car you drive. That required that the real costs were blocked from deduction. And now, if you keep books, you naturally register all your real actual expenses in the bookkeeping, and so you have to express that a certain amount of them has to be eliminated, and that's the difference between the actual costs which were incurred and the costs which were allowed for deduction in the tax law. And that is the idea of that lengthy entry here. Also, sometimes a taxpayer has to establish a second household. You have then also additional expenses. They are in a certain way private, but the fact that you have to finance two households cannot be sufficiently explained by private motives. That can only be overwhelmingly explained by the business motive. So imagine you live with your family in Munich and you buy a firm in Hamburg, and the firm in Hamburg requires that you work there 4 days a week and supervise your newly acquired employees. Then you have no choice. You have to stay in Hamburg for 4 days a week, and either you go to a hotel, which can be very expensive, or you rent or buy a small flat. And so the costs for a flat usually are private expense, but here it's not sufficiently explicable that you have two houses. Having an additional flat at the place where you work cannot be explained by private motives. There is only the business motive which explains that, at least if it's not a luxury accommodation. And so you can deduct the cost for an additional second household, which is caused by business, if you can prove that. Imagine again, double household, non-deductible business expenses, that requires a business expense. So you have first to test that there is no major private motive in that. And if there are now additional expenses and they exceed certain limits which have been set to avoid abuse, then the exceeding amount is non-deductible. The expense for home office and the cost of its furniture are non-deductible because otherwise everybody in Germany would design a part of his private home as a working place, as a home office, and try to deduct the rent costs of these square meters, the furniture costs and everything else for that as business expense or as income related expense if you were only an employee. And that was possible in former decades, and then after a time it became so popular and the fiscal administration had usually no chance to inspect that successfully, that in the end they limited that by a rule on non-deductible expense. Other expenses which are not explicitly named are non-deductible as far as they are to be regarded as inadequate according to general public opinion. So if it's in a bar or other things which you can do for businesses or whatever. Later the list grew longer. Fines and similar punishment payments which have been charged by a court or a public authority in the European Union. And so, for example, you commit a breach of cartel law and now you are condemned by the European Union Commission to a payment of €2 billion to the European Commission. Then that payment would be a punishment payment and would be non-deductible. Even breaking cartel law is something where you have no private motive. That's entirely to bring your business into a better position, and nevertheless it's a forbidden activity, a punishable offense, and the punishment payment cannot be regarded as a business expense, or it is a business expense in that circumstance, but not deductible, so you cannot deduct it when you compute the profit. Somebody detected after a time that interest charged on tax payments which you have paid delayed because you committed tax fraud is also undeductible. Making bribes has been declared undeductible, and certain supplementary charges after a correction of transfer prices also are non-deductible. So there are many things not deductible. Trade tax is not deductible when you compute the taxable profit from business, and donations to political parties also not a business expense, although in reality very often donations to political parties by business owners are motivated by business ideas who want to create a positive atmosphere with politicians. Okay, let's call it this way. To give them some donations for their election campaigns so that later they have an open ear and eye for your problems if you need their support. That's very often people, owners of firms even, are willing to support different political parties and not only one. And there you can see that this is motivated and not by personal convictions. A general thing is when you have non-deductible business expenses, then you have to documentate all the necessary proofs, what has happened and so on. More precisely than in other cases, you have to make lists of them separated from the rest of the business expenses. In a business bookkeeping, usually that's automatically fulfilled because there you have separate accounts for potential non-deductible business expenses. 4.9 says that the costs for the first education of the business of the taxpayer for a job are not deductible, though the costs for the first professional or vocational education or for studies are not deductible for the first degree and first profession. Only later when you train for a second job, that is accepted, that you then want to keep or improve your salary, or if you're a business owner, that you want to change over to a better job, and that is then regarded as a business expense. Yeah, so the general idea is all these things are blocked from deductibility because the idea is other people who don't own a business also have to pay these things or similar things from their tax net income, and a business owner should not be in a better position if he does this for that. Usually the same rules also apply in the area of the other types of income. So the income-related expense area, that's done by a cross-reference in section 9, and you very often have also cross-sections in 4.5 to section 9, so very often you have parallels. Let's think about examples so that you can have and imagine. You can imagine. Today is not my day of English grammar. Today is probably my day of beginning dementia. So you know what I wanted to say. A German firm makes a birthday present to a business friend, €1,000. Naturally, non-deductible. 4-5, number 1, it's more than €35. The same firm makes a Christmas present to another business friend, a bottle of wine, €30, and so clearly that's 4-5, number 1, but deductible are presents up to a cost value of €30. The bottle of wine was €35. The bottle of wine was €30. So clearly not hit by the non-deductible rule. So deductible. Christmas present to a long-time employee. €500 in form of a golden watch. Here, surprise, ladies and gentlemen. Presents to business friends are non-deductible. An employee is an employee and not a business partner. You don't give a present for business reasons for a business occasion. So to do business with an employee, that's just a remuneration for his work, and it's kind of a salary. So that's not hit by 4-5. Number 1, this is just a wage. So it is deductible for the employer, and surprise, it will be regarded as a non-monetary revenue for the employee, and so for him it will be a part of the taxable income. The managing director of a firm invites an important business partner to a restaurant. They go and eat nicely. 3 persons, financial director, managing director, and the guest, €350. Manager on 120, finance director 80, guest 150. Is that fully deductible, partly deductible, or not deductible at all? Fully deductible, no, because it's hospitality expense. It's definitively, that's the first step, definitively caused by business, and only caused by business. You don't have a business dinner for private reasons. No. 4-5, number 2 is applicable. So if the total amount is inadequate, the inadequate part of the amount is blocked. Now €350 for 3 important people is not wrong. Probably when you go to a nice restaurant you can spend there €40, but that is per person. That is probably not really impressive. I would not recommend to invite a very important guest to McDonald's. I would not recommend to invite somebody to a pizzeria of normal price level. Might also give the signal we regard you as not specifically important. So very often people will try to find a very special restaurant, let's say a 1 or 2 star or 3-star restaurant, or a very nicely located hotel restaurant or so, in order to show some taste and esteem for the guest. So I would say this is not an inadequate amount if there are managers, is tolerable. So the 30% of the amount are only blocked, and so that would be €105. It does not matter who eats what, because you will not be able to find that out later, and in that specific situation, no problem. A firm organizes a Christmas party for its employees, spends €100 per person, 30% non-deductible. Not again, this is not a business occasion, because it's not an invitation combined with doing business meant it with others. This is an internal event in the firm, so this is business expense, and it's not meant by 4-5 number 2. Because that is inviting business friends, business partners, clients, or suppliers to restaurants or having similar occasions. This not. If, on the other hand, you make a Christmas party for all business partners, customers, and so suppliers, and naturally all your employees also have to show up, then this would be 4.5. Number 2, because this is now primarily a business occasion, not an internal activity of the firm. So that would be deductible there. Concerning the bribes, you may imagine a firm makes so-called helpful payments to a director of another firm in order to convince that person to give orders to our firm, 10,000 euro, preferably in cash. And the answer is definitively a bribe. At least not deductible if making such a payment is a criminal offense, and nowadays it usually is, so not recommendable. The fiscal authorities will even cooperate with other authorities in order to ensure punishment of that behavior. So the answer is no, don't. The same, imagine somebody called Charles has a small firm from father and mother. He got it, surprisingly, because mother and father died in a car accident. And now this is a craftsmanship firm which is subjected to special legal restrictions. The owner, or at least the leader of the firm, must be somebody who has a professional master certificate from the Chamber of Craftsmen. In Germany, that's called a Meister degree. So Charles is now only allowed to keep the firm for a restricted period of time and has to pass such a Meister exam within a limited period of time. If not, he has to part with the firm. By the way, a similar situation would be if your father or mother are tax advisors and die and leave the firm to you. You are only allowed to be the owner of a tax advisor's firm if you are a tax advisor yourself. So that would also be such a situation. Now Charles is rather a practical fellow and tries to avoid learning and instead offers a bribe of 5,000 euro to one of the teachers in order to obtain the exam questions in advance. What can we think about that? First, Charles makes a bribe. This is called bribe business because he wants to make the bribe in order to be able to keep the business, definitively. If that's not an expense which is meant to give him his first professional exam, then it would be a business expense. So if he already had a job before, a qualification, studies or so. But 4.5 number 10 says bribes are not deductible if making the bribe is a criminal offense, and bribing a teacher is definitively, in all cases, a criminal offense in Germany. So guillotine falls down, and this is definitively not deductible. By the way, we can learn something from life, or for our lives from that. First, that Charles is definitively an idiot. The guy was willing to pay for the questions instead for asking for the solutions. So you see, there was evidently a need for the bribe. And the second is giving presents to teachers is always a criminal offense in Germany, so never try to be generous towards a teacher. Things like, let me pay your pizza, or let me give you a personal discount in a shop, are always near to criminal behavior and will always be understood as such in Germany. So if you come from another culture and think you are obliged to give gifts to teachers, don't do it in Germany. Definitively a red line. From time to time I must say that because actually other cultures have other traditions. It does not show respect for a teacher to offer presents, or so don't. The state compensates this by paying us rather, at least as the state thinks, rather well. Yeah. Another thing, business owner BO has a business car and he also uses that to drive to his firm in the morning and back in the evening. And the distance between home and firm is 50 kilometers. And the exact costs of the car are not really known, but it has a gross list price of 50,000 euro. Okay, that's a bit expensive for a car, but one never knows when you see that movie. So inflation might bring the problem away. What happens here? Now, the cost for the travel to work are cost by business. Clearly business expenses. You don't travel to work because you like your workplace so much. And when you travel back in the evening, one might argue, well, you just travel home for private reasons. You want to sleep at home, but the main cause why you have to travel home is that you had to go to business in the morning. So that's the only convincing view of the matter. And nobody would allow you to stay in the firm and sleep there till the next morning. So if you don't want to lose your job, you have to travel home. So private motives are ruled out for that. But on the other hand, you have already heard that in Germany the costs of commuting to work and back are standardized. In principle, the rule is you get a standardized amount for the distance in kilometers for per working day, 30 cents at the moment. Will be modified a bit in 2021, but not for the first 20 kilometers or so. Here, this is the 2020 situation still, so you get a deductible amount, a distance allowance or Entfernungspauschale of 30 cents per kilometer per working day. Now, 200 working days, let's imagine that were used by a business owner, 50 kilometers and 30 cents, so 3,000 euro. Now, the real or actual costs are then blocked from deductibility, and if you cannot find them out properly, then you have to estimate them, and that is usually done by a formula in the law. You ask for the gross list price of the car at the first registration, so not the real purchase price, but the official price which the factory proposed to the traders to claim from customers. That's always too high. Every trader gives a discount, but this is relevant for tax matters then, because that's the only easily available standardized idea of what the car has as a value when it's bought. And so you have to regard as cost per kilometer 0.03% of the gross list price of the car at first registration times, so multiplied by the kilometers per month. In that case, that leads to 9,000 euro. So the difference, 6,000, has to be eliminated from the cost as non-deductible. If you now look to the technique, how you can do that, you end up with, again, this sheet of paper. You take the commercial profit calculation, that's assumed now in our enterprise that are 500,000, and now we look through the list of expenses that the firm has. There was a present to a business friend of 1,000 euro. It should not be deducted, so we have to cross it out from the list of expenses, and to eliminate minus 1,000 can be done by adding back 1,000 to the result. Hospitality expenses were there with 350 and 20,000. 30% have to be removed, so you just add 105, that's 30% of 350, and you add 6,000 to the final result. That is the same as crossing out 105 and crossing out 6,000 from the list of expenses. 10,000 bribe expense can be eliminated by adding 10,000 again. So when we look to the commercial profit, 500,000, how many changes have to be made? In our example, 17,105, and so the tax profit ends up with 517,105. Congratulations, you survived. Naturally, you remember there are certain people who are not obliged to make books. Those who especially make the modified cash flow statement and just list their revenues and expenses. Naturally, they don't have to make any adjustment because they have no basic computation which they have to modify for tax. They just start with a tax computation of revenues and expense, and so they would just leave out the non-deductible expenses or so. Or sometimes they would just, for example, the restaurant invoice, the bill, naturally you would have to show it with 350 and then you would eliminate the 105, so you would probably have to explain to the fiscal office which bill belongs to which expense or so. But in principle, you would just leave out the expense in the calculation. Adjustments are usually not necessary. So in our case here, our charts, imagine the firm brings a revenue of 200,000. 120,000 is the usual business expense for wages, material, raw material, blah, 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 blah. The 10,000 business expense for the bribe would just be left out, and so we end up in a final result of 80,000 because that comes out when you take the business revenue and the 120,000 which you may deduct. Good. Just to repeat again, the reasons for the exceptions from the obligation to make a balance sheet is usually simplification. That people sometimes get the right to use other methods. Usually where somebody has already to make up a balance sheet for non-tax reasons, then there is no need for a simplification, so you also have to make balance sheets for tax purposes. That's in AO, paragraph 140. Also in agriculture and forestry or in a genuine business, you are obliged to make a balance sheet for tax purposes if your business is not very small. The limits here have been adjusted in the meantime. I see that. I think at the moment the limits have been increased. Look it up in 141 AO, and at the time when you in 1 or 2 years see that video on YouTube again, and probably inflation has hit again, so look it up. And a balance sheet is never required as mandatory for people from self-employment or independent services, or so section 18 SDG. If you are not obliged to make a balance sheet, you can opt for the modified cash flow statement regime under 4.3 ESDG, and there you just list your business revenues and business expenses, and they are attributed to the year when they are paid. That is said in paragraph 11 ESDG. We're going to talk about that on a later occasion. Further rules are agricultural businesses can even use more simple rules, and ships in international trade also have a special option which they can use. And this, ladies and gentlemen, is the most hopeful slide of today because it indicates that we are through with this subchapter. I thank you very much for listening. If you now feel being a victim of a very long lecture today, I apologize profoundly but not honestly, and wish you a nice rest of the day. Hope you don't stay away for eternity but come back to this channel and perhaps bring with you some friends or acquaintances to show them the channel and make our taxation program a bit more well known in the world. Thanks very much, and best wishes to all of you. Now I have to shut up, and probably that's the best, at least, which I can do at this moment. Okay, let's go away.